Three key aspects of selling a roofing business for a top price. Hi, I'm Nolan Baum. I'm a certified business broker, and let's get into it. Number one, the cost of workers' compensation for roofing companies face some of the highest rates out of any industry. I believe roofing businesses is probably actually number one for most expensive when it comes to workers' comp, which can significantly impact the business's valuation, particularly in an asset sale. Buyers often prefer stock sales to retain the current owner's lower workers' comp rates, as these rates can affect profitability. If they start a brand new entity that buys the assets of an existing roofing company, an asset sale, and if that new entity is a brand new entity with no workers' comp history, then their rates could even double. Some companies use professional employer organizations, PEOs, to manage payroll and workers' comp, potentially reducing their rates. Though PEOs do come with their own set of pros and cons. If you go with a PEO, your employees technically work for that PEO. I've seen some pretty creative entity structures that mimic PEOs, but check with your CPA for more help with that situation. Buyers will closely examine these expenses when assessing the business's financial health, and they'll see if they can reduce your workers' comp rate. Number two, different specialties. Roofing businesses often focus on specific niches such as residential versus commercial, or storm chasers, or metal roofs, or flat roofs, etc., etc. Also important is their revenue model. Does the roofing company focus on insurance claims or do they focus on retail? For example, the insurance revenue model can be subject to changing laws. Some states might have laws that discourage or make it illegal to solicit or assist with insurance claims. If you're in Louisiana, Florida, or Arkansas, you'll definitely want to watch these laws carefully. But retail sales, also known as full pay, might not be as scalable and can rely on relationships a little more. Storm chasing roofing businesses rely on unpredictable weather events, which might be less predictable and it might be a little bit harder to sell because of the inconsistent revenue streams. Buyers want companies with diverse and stable niches that reduce reliance on unpredictable market conditions. Residential is better than commercial, and you'll want to have an even mix between insurance and retail sales for the highest business valuation. Number three, different organizational structures. Roofing companies typically operate under one of these three structures. Number one, sales organizations, where they outsource all the labor. Operational organizations, which is in-house labor. Or a hybrid organization, where they have a mix of both. For example, they may have in-house labor, but they might still add more subs depending on how big the job is or if there's a specialty needed. Sales orgs offer flexibility but may lack quality control, while operations orgs often command higher valuations due to greater control and consistency. Hybrid orgs provide adaptability to market conditions. Buyers prioritize understanding the operational model as it directly influences the business's scalability and valuation. Those are the three unique aspects of a roofing company versus any other company and how they affect the valuation. If you're interested in a free consultation or if you're thinking about selling your business in the near future, click on the link in the description and we'll see you in the next video in the top right-hand corner.